Hello, everybody. Welcome back. Welcome back to the chat room. This is Ed Ponzi speaking. Great to be here with you today. Boy, what a wonderful day. What a wonderful world it is out there. I hope you're all enjoying yourselves and enjoying life. It is now fall, and it is now the end of the third quarter. So we need to be aware of that, right? We need to be cognizant that this is the end of the third quarter. This is how it ends. And that means it is possible, but not necessarily going to happen that we may see some last-minute reversals. Perhaps some folks who have made a lot of money long the dollar, you know, they might want to close that trade so that it reflects on the books for the third quarter. Or if they were short the euro, right, same thing. So if enough people are doing that, you could see some moves at the end of the quarter. You could see some shaking around at the end of the quarter. So I guess we'll just have to wait and see. But that's all in the future. And frankly, you know, I would like to see things get shaken up a little bit. I'd like to see some moves made. I'm sure people who are short the New Zealand dollar, for example, have made a lot of money this month. You know, if you look at this chart, it's kind of funny, isn't it, how when you look to like the low of this candle and the bounce we get off of that low, and how evenly it matches up with these lows from last year. Not perfect, but very, very close. You can tell what's happening on the chart is that, you know, as the price is falling, and look how big the candles got on New Zealand dollar. Just unbelievable. There was intervention in New Zealand. We'll get to that in just a second. But it's amazing. You know, what happens is everybody looks left. Everyone looks to the left to see what, you know, to see what's out there. And they all said, okay, this is the area where it's going to bounce, so this is the area where we're going to buy. So they buy there, and we get the bounce. You know, it's self-fulfilling in a way. But the question is, now what happens? You know, this is one of those trades where, and I haven't heard from any of you who said that you were short this one. I know that a lot of folks out there are making trades based on FXED, and this has been spectacular, right? Right down the line here, really steep drop. Should pop back up here. Well, should it? I don't know. I hope it does. Maybe it's popping back up a little bit already, but I hope this comes back up. That's what I want to see. You know, I want to see the price move back up so you can get short, so I can get short. And that would be an ideal situation from my standpoint. But the one that really fascinates me, however, is New Zealand yen. And here's the thing. Look at that top. This has nothing to do with a trend trade. This is a breakdown, right? And this is a triple top. Some people refer to this formation as a Buddha top, and it goes, for example, up, down, up, down, up, down, almost like diagonal lines, and that's what's indicated by a Buddha top. That's one you don't hear about very often. Okay. All right. So anyway, 86 looks like the level. All right. This was the support back here in May. This was the support in August. And that support is now broken, so it should act as resistance if we come back up. If this comes back up to 86 or even close to it, I'll be shorting it. And to me that just looks, because like if you back it up, we'll say, well, is there a lot of downside? What do you think? Now look at it, right? Now look at it. It's come up from below 60 up to 85. Is there a lot of downside? I would say there's a lot of downside, especially if two things happen. If New Zealand continues to intervene, there's a lot of downside, and if the stock market has trouble, then the yen would, that's the other side of the equation, then the yen gets stronger. That would really be the key here, is if we get a rally in stocks, that might push us up to 86 on New Zealand yen. But really, the stock market is starting to look kind of squirrely, kind of unpleasant. And I'll show you the INX, right? And so really, the S&P 500 correlates to this trade quite a bit. This has been an amazing ride. We had a sharp sell-off last week. Big green day to grab a bunch of it back, and immediately the bulls get smacked down. The bulls make another try on Friday. They get smacked down again. We get to a new low for the month of September, and then it fights its way all the way back up to close nearly where it opened. An incredible day, an incredible couple of days. But one thing you'll notice, too, is just look at the size of the candles. The candles are just getting a lot bigger, which means the market is getting a lot more volatile. And I think the market getting more volatile, I think, to me, there's a certain level of fear that wasn't there before. We've said before that this is a thin market where it's really just a handful of stocks that are propelling the indexes higher. So it's not really a healthy type of bull market. It's a bull market that's really being carried by just a few stocks. All right, so there's not, excuse me, there's just not much to say about it, except it's a little bit scary right now. And of course, look, our stocks, we love the Apple still. We're still in Apple. Another green day for Apple. We got a nice bounce off the 50-day moving average. That's what those arrows indicate. The S&P 500, all that really matters on this one is the 100-day moving average. We didn't really get down to it. We needed to get a little bit lower. We did not really test that that moving average. So let's pull it up there. 100-day moving average is absolutely critical right now on the S&P 500. I think if the 100 breaks, then I think we're going to see the stock market maybe get a little bit scary. And we're really, that's the point where I think the yen really gets strong. You can see 1956 for the 100-day moving average. It's not really, we didn't really quite get there. We didn't quite get there yet. Okay. All right. So anyway, back to New Zealand yen. Let me tell you a little story about New Zealand dollar, right? Did you know that the Prime Minister, I'm not sure if in New Zealand do they call him the Prime Minister or the President, I'm not sure. But, you know, the leader of the country is a currency trader. Don't know if you knew that. A guy named John Key, right, from New Zealand, you know, became a currency trader in New Zealand and eventually moved to the United States. He ran the Merrill Lynch trading desk for about 6 years. Then he moved back to New Zealand, ran for office, and now he's the president. He's like, it just goes to show you, ladies and gentlemen, if you're a currency trader, you can do anything. All right. Well, especially in New Zealand, right? It's just not as much people to compete with. But anyway, pretty fascinating stuff. The man, very successful, right? And quite the currency trader, and now the leader of the country. And what do you know? There's intervention going on in New Zealand. It turns out that in August, they did their highest level of intervention in 7 years, since 2007. So there's a great deal of intervention going on. And $561 million doesn't sound like a lot, but then it doesn't really take a lot to move the New Zealand dollar. And, you know, and that was in August. We don't know if there was intervention in September. But you can see in August, the price was already off. Well, go against the dollar because that's where they're going to intervene. In August, we're already off the highs, and they smash it down. But it just goes to show you, I'm certain that the leader of New Zealand, John Key, knows how to read a currency chart. Of that I'm absolutely certain. Now, he said that he feels this should go to 65. He thinks fair value is 65. Now, first of all, that's bad form. You're not supposed to set targets. But he can say, well, I didn't set a target. I just said it was fair. That was fair value would be 65. 65 is a long way down, ladies and gents. 65 is all the way down here. Okay? So, you know, are they going to continue to intervene? I don't know. But it's an almost perfect scenario because it's a very weak currency right now. And it's a commodity currency, and commodities in general are very weak. And if the stock market begins to crumble, then the yen gets very strong, and it becomes a perfect trade to trade New Zealand against the yen. And oh, by the way, there's an almost perfect setup, and there's a ton of downside, like 2,500 pips of downside on this, potentially. So that's what I'm looking at more than anything else right now. Australia, somebody said, well, why not Australia, New Zealand? Australia and New Zealand are both going to be weak, I think. Australia and New Zealand are sort of locked. There's a big support level on Aussie New Zealand at around 109.15 and a big resistance level just beneath 113. So a fairly wide range. But I don't really think one is going to gain the upper hand over the other. This could be a nice setup for an elevator trade, by the way, but you know what would really make me happy if I were going to trade this would be if Aussie New Zealand were to pop above resistance, right, and maybe get the breakout traders long and clear out some stops and then fade back down. And there's a psychological thing that happens when you break above resistance. The breakout traders get excited and they get long. Now, if that breakout trade succeeds and the price continues to move higher, the breakout traders win, and that's all well and good, you know, good for them, happy for them. You know, it doesn't bother me because I'm not short. But if we get the false breakout and then it comes back down, right, if people are getting long above this area, and they're fresh longs, right, because if they're buying the breakout, that means, you know, they haven't even bought yet. So they're fresh longs. And if you get those fresh longs in there, and then the price falls and the breakout fails, then those are the type of people that are going to get out. Those are the type of people that are highly motivated to close out the trade at that point. Okay, so you know, that's something I would consider, but the truth is I don't really see a lot of advantage either way on Aussie New Zealand. Iron ore got down to $77 a ton. $77 a ton. Now you have mining companies, like particularly in the U.S., there are mining companies that can't mine iron ore for $77 a ton. They can't do it that cheap, right? This is one. See, Cliffs Natural, Cliffs. Look at this stock. The price of iron ore is killing Cliffs. They literally can't dig it out of the ground at $77 a ton. It's not worth digging it out of the ground. It costs them more than that. They would lose money for everything they sold, and the more they sold, the more they would lose. So not only is it not an ideal situation, it's a pretty darn bad situation to be in. Pretty awful. Okay. So, and by the way, take a look at Brazilian stocks. You know, Brazil is an iron ore producer. Look at that. It's just awful, right? Anything like having to do with iron ore is just getting destroyed. And the Australian dollar is very much to do with iron ore, and it's getting destroyed too. Due for a bounce down here, I would think, just like New Zealand. Right? Due for a bounce, but still pretty bleak, I would have to say. Okay. Anyway, so New Zealand yen continues to be my favorite way to play this, but Aussie yen also could have some possibilities here. Aussie yen is right on this trend line. Let me get rid of this moving average. I don't want to confuse anyone. Do you see the trend line here? And by the way, that trend line, this trend line coming up, if that breaks, it's going to 94. 94 is a 38.2 Fibonacci retracement of this entire rally, right? But you've got this trend line in here. If that trend line breaks, I think it goes right to 94. So Aussie yen and New Zealand yen, they both seem to have a lot of downside here. And it's brutal what's happening with iron ore. It's just brutal. And if the stock market starts to go, then the yen is going to become the strongest currency out there. Okay, so it's better to know in advance and to just, don't be caught by surprise if these things happen. I'm not predicting anything. I'm not into the prediction game. I'm just saying, okay, here's the scenario. We need to be ready in case this happens. That's the way I look at things. Okay. Now let's talk for a minute about our stocks. I gave you the stock. Didn't get any questions, you guys. So do send in your questions. The key remains the 100-day moving average on the S&P 500. I showed you that earlier. Just put it back up there again. Tell me this hasn't been important. When you look at all the times that it's bounced off of that level, it came close again, but not quite. And I talked to you guys about, I think I may have mentioned Amazon recently. Amazon, something that I'm thinking about shorting. Let me give you the setup for Amazon. First of all, do we like Amazon.com, the company? Sure we do. Amazon.com is a great company. It is the world's biggest online retailer. It's probably the 5th or 6th biggest retailer in the world globally. And the biggest retailer is Walmart. It's going to take a long time to catch up to Walmart. They sell a lot of stuff. But Amazon's the biggest strictly online retailer. And it is growing much faster than other companies that are also retailers. So it's a huge company that's growing its revenues very quickly. That's why I say that it probably won't be long until they're the 2nd or 3rd biggest retailer in the world. A couple of years. They're going to need a couple of years. And catching Walmart, they might never catch Walmart. But if they do, that'll take a lot longer than a couple of years. But I love the company, but I don't love the stock. The company has so much potential, but potential is wonderful in a bull market. We looked at the market earlier. If that 100-day moving average breaks, I don't know if we're going to be in a bull market anymore. So what we have here, we have lower highs and higher lows. It's a symmetrical triangle. Now, based on this chart, it doesn't really look that bad, does it? I mean, maybe it breaks this trend line, and maybe what? It comes down to these lows. 280 area, that's about 10%. Okay. But I'm going to tell you something. If you back this up to a weekly chart, it looks a heck of a lot more scary on the weekly chart than it does on the daily. Allow me to show you what I mean. First of all, how important is the 100-day moving, 100-week, not 100-day, how important is the 100-week moving average on this chart? Way back here, starting at late 2011, early 2012, the 100-week moving average saves the day on Amazon. Back then, it was only trading at around 160. Since then, it's hit 400. Got way overextended, but found its way back to the 100-week moving average and back again. And now we're getting close again. So really, a break of that trend line on the daily maybe brings it down to here. Not too bad. But a break of the 100-day moving average, getting vertigo yet? Look how much downside this has potentially. it's a long way down, ladies and gents. Now, you see, here's the thing. This company, as fast as it's growing, it doesn't have any it doesn't really make money. They keep putting all the money back into the company. And they sell everything dirt cheap. The point is to become bigger and better and cutting edge, and we're going to have drones delivering stuff, and just, you know, they figure, well, we'll take over the world first and then we'll monetize it later. Fair enough. I actually endorse that plan of attack. I think it's going to work for them in the long run. But in the short run, this could get ugly. You can see it's very obvious how the price is getting contained in a tighter area. Now, it could always break to the upside, but guess what? We're testing the downside right now. And if it gets through 310 and the S&P 500 breaks the 100-day moving average, then it gets ugly, folks. And then we get short again because, you know, we shorted Amazon. We actually made money on the short side and the long side earlier this year on Amazon. Amazon's been very good to us. And I got a feeling if we short it here again, you know, first it's got to break down. You got to be patient. I'm not shorting it right now. But if it breaks below 310, that's where it gets very interesting to me. I'd like to point out too that this stock is, relatively speaking, this is a weak stock. This stock is much weaker than the overall market. This stock is down almost 24% year to date. Okay, and it clearly has the lower highs, so it's already out of favor. Now, I think if you look at, you know, something like 170 times next year's earnings is what this is trading. It's just an absurd number. But on a sales basis, it's only trading about 2 times sales. Point is, the company is going to probably rule the world someday. But that's not going to stop it from getting hurt in the short run, because if people get scared, they're going to dump high valuation names and they're going to look for reasonably valued names. They don't want stocks that are trading at 170 times next year's earnings. They want stocks that are trading at 7 times next year's earnings. All right, that would be extremely low, but I think you get the idea. They're going to want super safe stuff. And this is good for us too, because, you know, look, we have our fair share of shorts, but our shorts aren't very volatile. And I believe I've mentioned before that we kind of need to add a more volatile short to the mix. When you look at the stocks that we're short right now, Las Vegas Sands, I'm going to show you on the daily. By the way, let's put up the 50, the 100, and the 200. The 50 is blue. The 100 I'll make green, and the 200 will be red. 50, 100, 200 for Las Vegas Sands. Fanning out into the proper order. We are short and we are making money, and look at this. Looky here. If we can get under 60 bucks, we're going to start making more money, and we're going to add to this short, getting very, very close here. Casinos just don't look good right now. They just don't look good. And so we're already short. We're already making money. We're going to make more, I think. Wynn is another one that we're short. This one, you can see it had a sort of a symmetrical triangle. Faked out to the upside, broke down to the downside. I guess we should get rid of these lines. They didn't really help too much, but we've been short. And this is another one that if it gets beneath 175, we may short more. This chart doesn't look quite as bad as Las Vegas Sands, but it's just the wrong time to be in the casino business, in my humble opinion. They had a rough day today. Wynn Casino had a very rough day today. Big red candle there. Lululemon. We're still short. We're still happy. And especially if the market goes down, I think this is going to go lower. I just don't believe in the company. I think anybody can make yoga pants. I think Nike can make them. You know, I think Under Armour can make yoga pants. I think probably a whole lot of different companies can make yoga pants and sell them for half of what Lululemon does. So I'm just not that impressed with it. Oh, and their big growth area is they're going to sell stuff to guys. Look, good luck with that, okay? I can't see myself wearing anything from Lululemon in the near future. Perhaps I'm wrong, but that's just me. But anyway, still short and still loving the fact that I'm short. Kimberly-Clark, I don't know what to do with this thing. I mean, it hasn't really moved since we shorted it. We're not losing money. We're not making money. It's boring, but then again, we're not here for the excitement. We're trying to make money. And you can see how the 200 is having a lot of time. Every time it hits the 200-day moving average, boom, down it goes. And that covers our shorts, but if, like I said, Amazon could be joining the ranks of our shorts very soon. On the long side, we love us some Apple. Apple bounced off of that 50-day moving average. Stick save on the 50-day moving average one more time. And hopefully that holds up. We're still long some JCPenney. Penny, I've got to admit, I've been a little bit worried about Penny, but it's not too bad. We're still way up on this one. We bought it at 860, closed at 988 today. It's done better. It's done worse. After hours above $10 again. I still think it could hit 12. If you know, I'm not sold on the idea that we're going into a full bear market, but if I do begin to believe it, this will be the next long position that I close out. We're down to 2 long positions, and you know, if this one gives me trouble, or if the market gives me trouble, I might just cash this one in. I might just cash my chips on JCPenney because we're still up very nicely on it. Okay, and that pretty much covers our current positions. Now, flipping back to currencies for a minute, Euro Swiss is one position where we're still long. Not much happening here lately. Swiss National Bank has said again today that they stand ready to intervene, and they stand ready to take further action, which I believe is a hint at negative interest rates, and they're willing to do so immediately. So I guess they're scaring the shorts here with all this jawboning. They're scaring the people who want to short Euro Swiss. I would love to see people short Euro Swiss and push it down. But an awful lot of talk from the Swiss. You get the feeling that they don't really want to intervene at 120. If they can avoid it, they'd rather just try to talk this thing up. Makes sense, right? Intervention costs money. So they're doing a lot of, suddenly they're flapping their jaws. They were very quiet for a long time. And now you can't shut these guys up, right? Now you can't keep them quiet. But probably what this means is this is their effort, their kind of last-ditch effort to make this thing go up based on what they say as opposed to what they do. And that is something that is called jawboning. You know, we're just the threat of taking some kind of action is very often enough to create the desired effect. And that is what they are shooting for. Okay, ladies and gentlemen, so I remain long, and I hope to get longer. Maybe if these guys from the Swiss National Bank quiet down a little bit, maybe we can do that. Okay, that's going to wrap it up from here. My name's Ed Ponzi. Thanks again for listening. Do be sure to send in your questions to info@edponzi.com. I would love to answer your questions. And I'll see you guys in October. Well, just a few days from now, but I'll see you next month. Until then, everybody, be safe. Be aware that the quarter is coming to an end. Be aware that Friday is non-farm payrolls. And I'll speak to you again in just a couple of days. Take care, everybody.